Have you ever wondered what happens when a once thriving commercial hub transforms into a blank slate for new development? Welcome to the Commercial Real Estate Insights podcast. I'm your host, Steve Hamoen. Let's get right to it. Northridge Mall, a landmark in Milwaukee, is no more. The demolition of this city-owned former mall, which began in 2024, was officially completed on September 17th, according to the Department of City Development. This marks the end of an era, but also the beginning of new possibilities for the site located north of West Brown Deer Road and west of North 76th Street. The Common Council has already taken steps towards the redevelopment of this space by approving a request from the Department of City Development for $20,000. This funding is aimed at supporting a planning, land use, and zoning analysis for the site. The goal is to lay the groundwork for what could become a significant new development in the area. This situation in Milwaukee can be compared to similar transformations in regions like Kitchener-Waterloo, London, and Cambridge, Ontario. In these cities, we've seen former commercial spaces repurposed into mixed-use developments that include multifamily properties, retail spaces, and office units. Such projects not only revitalize the area, but also cater to the growing demand for integrated living and working spaces. In the United States, cities are increasingly looking at innovative ways to repurpose large commercial spaces. The demolition of Northridge Mall opens up a canvas for creative urban planning, much like what we've observed in cities across Canada. These transformations are crucial as they reflect changing consumer behaviors and urban lifestyles. CenterCal Properties and DRA Advisors have recently announced their acquisition of Long Beach Towne Center, an 870,000 square foot regional destination located in Long Beach, California. This strategic acquisition is part of an effort to enhance the company's portfolio of top-performing retail properties. The acquisition presents a significant opportunity to reimagine a prominent retail and entertainment destination in Southern California. In partnership with the City of Long Beach, CenterCal and DRA Advisors plan to implement a comprehensive reinvestment strategy aimed at elevating the guest experience. This strategy includes strengthening the merchandising mix and creating vibrant community gathering spaces. The redevelopment approach is part of a larger strategy to elevate communities, which includes other projects like Second and PCH in Long Beach, California. The planned improvements for Long Beach Towne Center include a thoughtful mix of national retailers, emerging brands, and local favorites to enrich the shopping experience. The food and beverage sector will see expansions with chef-driven restaurants, fast casual concepts, and cafe experiences, positioning the center as a true dining destination. Public realm enhancements are also on the agenda, with plans to create inviting outdoor gathering areas featuring shaded seating, enhanced landscaping, public art, and year-round programming that celebrates Long Beach's diversity. Additionally, the center will reinvigorate its entertainment anchors while adding boutique fitness, wellness, and family-oriented experiences. The design refresh will involve upgrading signage, lighting, pedestrian pathways, and parking areas to ensure a safe, welcoming, and convenient environment for all visitors. CenterCal and DRA Advisors' acquisition underscores their confidence in grocery-anchored, experiential, and necessity-based retail as resilient and high-performing asset classes in today's evolving market. In Falls Church, Virginia, the first phase of the West Falls development has officially debuted. This marks a significant milestone in the transformation of a 42-acre site into a vibrant mixed-use community. Spearheaded by Hoffman and Associates, this ambitious project is set to offer around 3.2 million square feet of new mixed-use spaces. These spaces will encompass a wide range of amenities, including residential units, retail outlets, office spaces, and public areas. This development aims to create a dynamic environment that supports both living and working experiences, reflecting the evolving demands of modern urban life. The West Falls project is part of a broader trend we've seen in cities across North America, where strategic repurposing of land is being used to foster community growth and economic vibrancy. Similar transformations have been observed in regions like Kitchener-Waterloo, London, and Cambridge, Ontario. In these Canadian cities, former commercial spaces have been successfully redeveloped into integrated communities featuring multifamily housing, retail facilities, and office spaces. These developments not only meet the growing demand for mixed-use environments, but also contribute significantly to the local economy by attracting new businesses and residents. In the United States, developments like West Falls illustrate a keen interest in creating multifunctional spaces that cater to a diverse array of needs. This approach is increasingly relevant as urban areas seek to adapt to changing consumer preferences and work-life dynamics. The integration of residential, commercial, and recreational spaces in a single development allows for a more sustainable and interconnected community, fostering a sense of belonging and convenience for its inhabitants. According to a recent report, the Puget Sound region has posted the highest office vacancy rate in the United States, standing at a staggering 27.2%. This figure places it among the top 3 U.S. markets with vacancy rates exceeding 25%. The report highlights the challenges faced by the region's office market, which appears as gloomy as the downtown Seattle skyline. The increase in vacancy rates can be attributed to several factors, including shifts in work-from-home policies and the changing dynamics of office space utilization. As companies continue to evaluate their real estate needs, some are opting for more flexible work arrangements, leading to decreased demand for traditional office spaces. Despite these challenges, there are opportunities for repurposing office spaces in innovative ways. This trend mirrors what we've seen in Canadian cities like Kitchener-Waterloo, London, and Cambridge, Ontario, where former office spaces are being transformed into multifamily properties, retail, and mixed-use developments. These transformations not only address vacancy issues, but also create vibrant, integrated communities that meet modern urban demands. In the United States, the shift towards mixed-use developments is gaining traction as urban areas adapt to the evolving needs of businesses and residents. The integration of residential, commercial, and recreational spaces within a single development fosters a sense of community and convenience, offering a sustainable solution to high vacancy rates. The Puget Sound region's high vacancy rate presents a unique opportunity for developers and urban planners to rethink and redesign spaces in a way that aligns with contemporary work-life dynamics. By drawing inspiration from successful transformations in Canadian cities, there is potential to revitalize the area and contribute positively to the local economy. In a noteworthy development, Trade Lane Properties has successfully closed its United States Industrial Fund 3 limited partnership at $250 million. This significant milestone highlights the growing interest and investment in the industrial real estate sector, particularly as the demand for logistics and warehousing space continues to rise. The fund's closing marks a pivotal moment for Trade Lane Properties as it aims to capitalize on the ongoing shifts in supply chain dynamics and e-commerce growth. The industrial sector has shown remarkable resilience, with investors keen to tap into opportunities that align with the evolving needs of businesses and consumers alike. This development is reflective of broader trends observed in North America, where both Canadian and American markets are experiencing a surge in industrial real estate investments. In regions like Kitchener-Waterloo, London, and Cambridge, Ontario, there is a notable increase in the demand for industrial spaces, driven by the need for efficient distribution networks and proximity to urban centers. In the United States, cities are also witnessing a transformation in their industrial landscapes. The closure of Trade Lane Properties Fund underscores the strategic importance of industrial real estate as a resilient asset class. With continued investment, these developments are poised to support economic growth and job creation in urban areas. As we look ahead, the industrial sector remains a key area of focus for investors and developers on both sides of the border. The success of Trade Lane Properties Fund is a testament to the sector's potential and the opportunities it presents for future growth and innovation. Thank you for listening to the Commercial Real Estate Insights podcast. I'm your host, Steve Hamoen. See you on the next one.